friends, this is the Cryptonian coming to you on a Sunday. I hope your weekend is good. Today's the 24th, and we're taking a look at a different chart. This is a MVRV Z-score chart. Now, what does that mean? Well, basically what it is it's a chart that shows you overvalued or undervalued uh, zones for the asset in which it's analyzing. So in this case, it's Bitcoin. You can find this chart at lookintobitcoin.com, and basically this chart tells you whether it's extremely undervalued or extremely overvalued. And so here you have the red zone up here, which is extremely overvalued, and this corresponds with tops. The green area is extremely undervalued, and this shows you bottoms. And so you can see here this orange line is the line that oscillates in between the overbought and oversold, or overvalued and undervalued uh, zones. And you can see this is over multiple years. So you can see as the chart starts out, you can see that it actually hit overvalued area here, and that coincided with the top in this area in 2011. Okay, and this is accurate within 2 weeks, by the way. And then you see here in 2013, extremely overvalued. 2014, extremely overvalued. These were two tops. And then you see a bottom come in 2015, right? Extremely undervalued with the bottom here in 2015. So it's calling these tops and these bottoms within, 2 weeks, which is, from a investor perspective, this is gold, right? Because if you can nail the tops and bottoms within 2 weeks, that's pretty incredible. I mean, that is 90, high 90 percentile of the move, of the trend, right? So that being said, look at where we are now. We're just above this green zone, okay? And it shows that we've already had a bottom here. Now, have we in the past revisited this bottom? Yes, we did actually. You can see we revisited it slightly. We were slightly above and revisited this oversold or undervalued area. This was in 2012. That appeared right here after we had the initial transition from the absolute bottom, the first pump from the bottom. Then in 2020, of course, we had the Rona, and this created another oversold, undervalued condition where we hit this zone again. That was a bottom in market cap. This black line up here, this is market cap, by the way. And then again in 2023, I think it's 2022, I'm sorry. At the end of 2022, we had another bottom here, and this coincided with the market cap being the lowest of that time period. And then we can see that it's a long way before we become overbought and overvalued. So what am I saying? What I'm saying is that now is not a bad time to start entering and creating your positions in crypto. Now this is for Bitcoin. This would be a lot different for altcoins. So you'd have to, that's a different analysis. That's a different subject altogether. But as far as Bitcoin goes and the cycles and where we are within those cycles, this is telling you that we just came off of a bottom, and although we may go lower, we could even revisit this green area. But statistically, and relatively speaking, according to historical market cap and z scores and values, this is any dip would be a dip for purchasing. And the lower it goes on this dip would be the better, right? As long as it doesn't break that previous low of 17K. I think it was 16.9, 17K, something like that. So if we went to 20, oh, that would be such a gift. That would be such a purchase opportunity. And this is what I've said in my videos previously. It would be great to go to 20. I'd love it to go to 20 because then I'd be buying like crazy. So, that being said, I hope this gives you an idea of where we are in the entire cycle of, Bitcoin. And next year, presidential election year, ETFs, all of these big funds lining up to become approved with their ETF funds, right? Um, for Bitcoin and for Ethereum. And then, of course, we have the halving, the Bitcoin halving, which is all of these things are very bullish. So next year could be a huge year for crypto, for Bitcoin. And so that's why I'm presenting this chart to you. I just want you to understand where you are. There's a lot of FUD out there, there's a lot of negativity, there's a lot of perspectives out there on social media that are extreme and extremely wrong. And some of them are actually quite accurate, but you have to know how to filter out the noise and focus on what matters because you don't want to be late to the game. And not only that, but even though let's say we are in a bear market and we're going to be in a flat bear market, sideways market for the next year. Well, you have the choice to do two things. You can either ignore it or you can use this time to slowly purchase over time and build your position so that when crypto does explode and move higher and puts in another cycle top, you can profit, you can have maximum profit from that time period. If you ignore everything and wait to the last minute, then you miss the opportunity to build a large position, right? Especially if you're, working 9 to 5 and you don't have a lot of money on the side. This way, the longer period of time you have to make small purchases over time, the better because it allows you to DCA, dollar cost average. So you're taking advantage of getting the best price possible with small purchases over time. That means your average is going to be pretty accurate. It's the law of mathematics. It's called DCA. Now, what I do is I have a different strategy based on DCA, and I'll explain that and share that in a different video. But suffice it to say that this time period now, when things are slow, when things are quiet, now is the time to be preparing for the bull market that possibly could be starting next year, which I believe it will start next year, and then end in the following year in 2025. So if you're serious about your future, if you're serious about crypto, if you're optimistic, you believe crypto is going to be successful, a successful technology, which by the way, many other highly qualified, highly intelligent investors um, do believe that. So if this is what you truly believe, then now is the time to take advantage and build your position now. Because when prices are going, it's going to be hard. Listen, psychologically, it's going to be very hard when prices are going up every day. It's going to be hard to make those purchases because psychologically you're thinking, man, I'm just going to wait for it to come back down. I'm going to wait for it to come back down a little bit more, a little bit more. And you're just going to miss out. And then it's not going to come back down to where you think it will, and it's going to explode higher. and then you're going to be like, oh wow, I missed that opportunity, now it's even higher. And so psychologically you get into this trap where it's very difficult to scale in and purchase at higher prices constantly every week. Now is the time where when things are quiet and prices pretty much flat, and suppressed, and you don't have those extreme movements, now is the time to prepare for that and continue to make your purchases every week or every month or maybe even every day, small purchases. So, that being said, please consider that. And again, this is not investment advice. I don't know your current financial situation, and I'm not a financial advisor, so I can't give you advice, but I can only share with you my perspective and my view. And so this is what I'm sharing with you today. So take it for what it is. Let me know what you think about this chart in the comment section below. Do you think we're going lower? Do you think we're going to go down to 25K, 20K, or do you think we're going to go up to 30K? Please let me know what your please let me know what your opinion is in the comment section below. And thank you for watching. Please smash that like. It helps the channel grow, and so we can reach others. And we will see you in the next video.